Well, markets have shot to new all-time records overnight as the chair of the US Federal Reserve, Jerome Powell, hinted that conditions for the first interest rate cuts there are not far away. OK, so let's bring in our business editor, Ross Greenwood. Ross, good morning to you. The markets responded.
They did indeed. The US market's just closing now. The Dow Jones didn't hit a record, but certainly the broader market index, the S&P 500, did. You can see, though, the Dow Jones index was strong. This came after the comments from Jerome Powell. So the Dow Jones up by 130 points. It also puts the Australian market on track for yet another record close here today. If we go a bit further forward, what we can also see is some of the other one-year performance of the Dow Jones. It's been fantastic, and this has been up the pent-up sort of expectation of rate rises, and that's being replicated here in Australia with our broader stock market, with a range of companies, including the Commonwealth Bank, hitting all-time records. But it was really Jerome Powell with what he's saying. This is the S&P, as I said, the broader market, which is at those all-time record highs as they've closed today. And these two have had a fantastic performance over a very long period of time. But let's go back and have a look at see what Jerome Powell had to say. He's effectively, and this was the comment that triggered the whole thing, we're waiting to become more confident that inflation is moving sustainably down to 2%. He said that plenty of times before. When we do get that confidence, and we're not far from it, it will be appropriate to begin dialing back the level of restriction so we don't drive the economy into recession. And that was that comment, we're not far away from it, that really triggered that market to rise overnight, and that'll be seen here in Australia today.
Well, yeah, it wasn't just stock markets breaking records overnight, Ross.
No, it was not just stock markets breaking record. The gold price was also soared off the back of that. We've told you about Bitcoin in the past. We'll show you that shortly.
Yeah.
Here is the gold price over the past couple of days, and you can see the strength in gold going to these new all-time records. In fact, pretty much there right now. And over those past couple of days, up another $32 US an ounce over the past year, replicating what's happened on the US stock market. The spot gold price is up by 19%. Now, this is largely because of central banks buying gold and the expectation of lower interest rates, and also the fact that there's a little bit more inflation out there. So they like to hold gold basically as an offset to their bond portfolios. That's really what's going on. So gold prices have been quite phenomenal. The other thing we should show you is Bitcoin, because it has had the most incredible run in the last little while. This is it over the past couple of days. It's just come off a little today, but you can see here 67,300 per Bitcoin. And this is largely, as we said last week, partly because the big exchange traded funds are having to buy Bitcoin to back their own products. And secondly, in April, they are going to halve Bitcoin. So this is Bitcoin over the past year, up by 205%. If you think about that, you could have got it for the best part of, well, $20,000 this time last year. Now 67,200 US, well above 100,000 Australian dollars per Bitcoin.
Yeah, so volatile though. You just never know when that's going to crash. I guess I would have preferred Nvidia if I'd have got the heads up on that one, Ross Greenwood.
That's true. It kept on going over as well.
Yeah. So getting back to the Reserve Bank, and there's plenty of criticism coming in for economists at the moment to say that last rate rise wasn't needed last year. So is all of this evidence now that our Reserve Bank is about to cut interest rates?
Well, there is plenty of evidence out there. I have a sneaking suspicion they might follow the European Central Bank, which overnight effectively kept its interest rates on hold. It was not as, shall I say, aggressive as what Jerome Powell was. It said really it's like the Reserve Bank here, having to keep these interest rates higher for longer. They are conscious of not pushing their economy deep into recession, but they certainly don't want inflation to hang around. Just have a listen to Christine Lagarde, the head of the European Central Bank, when she explained this after that decision today.
Although most measures of underlying inflation have eased further, domestic price pressures remain high, in part owing to strong growth in wages.
Yeah, just interesting to see that. And as I say, the Reserve Bank here doesn't meet until the third Tuesday of the month. Traditionally, it's met on the first Tuesday of the month. But what they're going to do now is miss the first meeting, or the first quarter of each month, rather the first month of each quarter. And then what they'll do is in the last one, which is this month, they actually go and meet on the third month, which means they pick up the inflation numbers and also pick up the latest GDP numbers, which are only out this week, of course.
Okay, Ross Greenwood. Good to see you, Ross.